Hello, hello, hello. Good morning, everyone. How is everyone doing today? Fine Tuesday, tie-dye Tuesday morning. Good morning, Patrick. Maybe it's turnaround Tuesday today. Good morning, Patrick. Good morning, Martinez. Good morning, CD. Good morning, Gary, George, Dave, Christoph, and all the people hiding in the background. Welcome, welcome, welcome. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. I gotta adjust some settings on this camera again. Oh, well. Oh, well. Such is life. Good morning, Options 22. Good morning, Sterling, with the team. Team Path Trading Partners. Okay. Interesting overnight session. Very interesting last night with the Bank of Japan widening the band for the JGBs from 0.25 to zero point 0.5, technically from plus or minus 0.25 to plus or minus zero point 0.5. Volatility sell off, and then a really sort of fast rebound after that. And that's actually short term, potentially bullish with cycles at the bottom. So I am watching for a short-term bottoming formation to be put in. That is what I'm watching for today. Good morning, Jacob. And we'll look at the US dollar, Japanese yen in a second. So what else do we have? Wells Fargo shares move lower in volume spike with mismanagement of loans. By the way, Netflix also negative story in the Wall Street Journal on Netflix. Netflix gapping down. We talked about Netflix yesterday afternoon with the key levels. Well, General Mills beat, but moved down. I got to do a little more dive in to see what they said because that was a beat. Today after the close, we'll get to that in a second. Housing in the toilet. No shocker there, but plummeting building permits. Housing starts down. I mean, this wasn't that bad a number, but building permits, that was brutal. Down 11.2%. The forecast was down 1.8%. Red Book finally coming in stronger over stronger. Now, this is not inflation adjusted, but consumer spending definitely picked up. You can see here, Red Book, definitely big bounce up in December. So for the holiday season, but is this going to be the last hurrah? I mean, you got the ramp up. You had the Black Friday stuff, Cyber Monday stuff, drop off. Now ramping up closer to Christmas, but I'm going to be really curious after the holiday season how this shapes up. So just wanted to point that out because we're going to really pay attention to that next year. And then nothing besides the crude oil stock change. That's about it. That's about it for today. Some stuff slightly down, but going to be watching for bottoming potential, I should say potential, in Apple and some of these mega caps. That's what I'm paying attention to going in. And then you see, thanks to Sterling pointing that info on Wells Fargo. Wells Fargo off over 200 basis points this morning. Basic materials, financial. Well, this might shift a little with Wells Fargo, but financial's been picking up a little strength over the last couple days. Energy on the upside, on the downside, consumer cyclical technology. But if we're going to put in a short-term bottom, I'm going to be watching for some things like communication services, technology, and consumer cyclical to move back up throughout the day if we're getting that bottoming formation. Fed watch, 62% for the 25 basis points. So keeping an eye to see if this really gets down to that 50-50 move over the next couple weeks. Fear and greed still in fear mode. And negative gamma, which we can still get some pretty decent upside rallies. The gamma flip area 39.16 about. So just about 3,900. We can see right here, yeah, just above 3,900. There's just a minor gamma wall at 3,900. Remember, we just got out of OpEx. Major option expirations isn't till, again, third week in January. And a lot of the option turnover is less than 1 day to expiration right now. But we are still in negative gamma territory, so don't let that shock you. If we start to get a rally on, it can feed on itself as it approaches, but that will diminish, especially as we pass 3,900. So guess what? That's reinforcing the breakdown zone on the S&P. Already talked about General Mills this morning. There wasn't much else besides that. After the close, FedEx and Nike pay very close attention to FedEx. That potentially can be minor market moving. So do not ignore that. Also, FedEx did trigger a double top. Did not talk about that yesterday, but I hope some people spotted that. Let's just jump to that real quick. Then we'll get to the markets because this is interesting. Triggered yesterday. Valid double top. Could take it down to just below the 62.5. Close below that. Could take it for a retest of the lows. What's this look like? So we got the moves down September, the rebound into the holiday season, starting to roll over in the last couple weeks. Look at this with the rotation zone slamming into it. Couldn't get back to prior breakdown zone and moving lower. Cycles still have some area to go down on the daily and the weekly with FedEx specifically. Now, there is no great pattern in Nike, by the way. Not going to waste everybody's time with that this morning. So, where do we sit? We'll get to some other things. Good morning, Vertical Dimension slash Amit. Good morning, Stafford. Hello, Christoph. All right. This could be some potentially bottoming territory. We had the initial big sell-off last night. Here you go with that Bank of Japan announcement. Then the recovery. Pretty decent recovery so far. So I'm watching, not necessarily breakout from here, but I'm watching how we react on any pullback. Specifically, going into the open, I'm watching between 38.26 to 38.20 if we get back there. You got a little support resistance becoming support shelf in between the 50 and the 62.5. If we don't get back there, I'm really then watching for a breakout just prior to these key levels. Going to bump down this a bit. But this is the area I'm focusing on, about 38.54. If we don't get down between the 50 and the 62.5%. Why? Because then the market has to prove itself. It couldn't sell off here. You've got consolidation here. Then I'm watching for the short-term breakout play. The short-term breakout play. Over on the macro with the daily, we got daily at cycles attempting to put in a bottom. Let me just pull this off real quick. Attempting to put in a bottom. There again, we could get some selling in the open, and this does not have to bottom today. That's why I'm on watching. And where would my target be? Potentially, my target would potentially be back to this 3,900, 3,910 area. Possibly up to 3,920. That would be the major breakdown zone. And then it will go to reassess depending on the strength. If we don't get the bottom today, I'm still watching for bottoming formations. If we were to break today's lows, especially if we were to break that 62.5 level I already put up there, that's 62.5. I'll just reiterate, and I get a key close below that. Then I'm focusing on the overnight lows. And if we break the overnight lows, then we could continue to sell off at a pretty decent clip. Why? Because all the buying in the European session with the open and just prior to that would be erased. And the next key level, we don't have much support until down to this 37.68 to about 37.74. So that's why I'm on alert. If we do start breaking down and especially take out this lows established last night, we could see a pretty quick sell-off into this key support zone. Then I will again be watching for a potential bottoming formation. So I sort of gave my roadmap of how, again, we're in tactile trading going into, and remember, big numbers coming out Friday with the PCE numbers and the GDP numbers coming out on Thursday. So it's not a time to just go to sleep going into the holiday season. NASDAQ, not going to go into much depth here, but cycles trying to get to the bottom on the daily. Back below the 62.5. NASDAQ a little weaker. NASDAQ a little weaker, but this 62.5, this 11,180 is key on the closing basis. So what am I looking at here? I'm watching this zone from the harmonics projection from yesterday in the 62.5. We start breaking above that, I will watch more aggressively for the bottoming formation and the rally back up, because that will also take it into the 4-hour rotation zone. If you want a key level here, you can use roughly about 11,219, 11,220. And then I'll be watching for the rally back in the rotation zone, and this takes us into a partial clear path move. However, before that, again, going to be focused. We're hovering just above that 50. Get the close below the 62.5, watching for a retest of the lows. Now, a retest of the lows, if we did get it, would be nice and fantastic. We could get a little potential double bottom. However, if you know how the probability shift below the 62.5, so this could be a very interesting day in the NASDAQ. Similar to the Dow, if we start taking out the European session lows, then we don't have much support back down till about 10,950, and then 10,820 are my targets to the downside. Let me just pull off these. I'm not going to update these harmonics yet because we don't have a strong pausing bar. Get to the spiders and the Qs. Spideys. I mean, overnight you tested this stuff with, we're sitting 379 right now. Close was 380. So if there's any buying pressure in the open, it's targeting that gap fill of 380. By the way, if you're trading this double, I'd be utilizing this as level already hit. Whether we retest the lows from yesterday or not, I'd utilize this as cycles get in the bottom with this level already hit. And then if it does break down, use the next major target area still with the gap fill from the 9th of November. Between that, about 374.13 to 373.28 is a major target area. Also, there's just major support in there. So if we did break below yesterday's lows coming in 378.28, that's my next key target area because we don't have a lot of support until we get down there. Cycles have a little more room to potentially run down also on the spiders, on the daily and the weekly. So, to the upside, besides the gap fill from yesterday, then minor would be about 382.31 to 382.46. More significant would be about 383.50, which is around the closing area from Friday and the opening area on Monday. The major, if we do get the major bounce, remember we still have a gap fill left from Thursday to Friday, and your key resistance is coming in roughly about mid 389s. On the Qs, the Q front, 266.50, 4 lower. That's the next low target, and then 264.28 to 264.91, and then you finally have the gap fill back from Wednesday, November 9th, coming in at 263.32. Or pre-market 268.56. The initial thing with any strength going in the open would be a return to this 269.75 closing area for the gap fill from yesterday. And then going to bump this level up a bit. And then I'm watching right around, this is where I will pay attention. We had a key close from the October 27th there, a reversal back through there, a high from November 8th, and Friday's low. 272.61 is the next key target to the upside. All right. So yeah, I am keeping an eye out for Turnaround Tuesday. George thinks we didn't come all this way not to fill the gap. The prophecy will fulfill this week. George Geo Mission Nostradamus there. Good morning, Anissa. On the spiders, we have a gap fill to 374. Yes, we'll jump back to that real quick. Pay attention on the breakdown. There's still the gap fill to exactly 374.13. That's this kilo area, not only for the double top target, but the gap fill target. So on any breakdown, I'm not even worried about minor targets. That's the area I will use as the key target. Just so it's clear. I think we've made that crystal clear. Everybody's getting on the same page. So many smart people in here. We got the smarty pants in here. All right, the potential double, never confirmed or triggered, obviously, no longer in play. Dow, pretty much the same analysis. You can do this yourself with the 62.5, but Dow breakout level isn't really until the breakout level I am utilizing on the Dow is about 33,260. Everything else would be scalpy before then. That's the more significant breakout level. And look, you get a little pre-area that I'll go off is about 33.30. Because why? We run into that and we get a little breakout area. Do have the clear path on the 4 hour, and look where the clear path targets are, about 33,228 to about 33,260 with the declining rotation zone. So any pop, that's the minor play up into the Dow. The key support on the Dow, again, we don't have super strong pausing bars yet. I'm just going to pull them off right now because my target on a breakdown, if we head down into it, don't get any turnaround Tuesday, 32,450. Retest of the 200. That is my key target. There will be major buying pressure there. And there's a harmonic. That's the red line here. There's a prior significant harmonic. Russell, same analysis. Going to be watch where Russell closes today. Roughly 1745 is the key closing level. If we break down, don't have much until about 1711 will be my breakdown target. On any rally, pretty significant resistance at 1747 to 1750. The DAX, still trying to hold the 50. I'm still watching for the close below the 50 for the then retest the 200. If we don't get the close and we do rally in the DAX, my target's 14,100. Notes, we're finally retesting the 50, and right below that 113.05 is the breakout level. That's where it starts watching for the closing basis. Why we get a close below that, I'm watching for the bigger pullback, and I will be targeting between the 50 and the 62.5, with 111.27 being a key target area. To the upside, major resistance now at 113.27, 113.28. Dollar index, I'm still watching. Yes, it's pulled back. No, we don't have a double. We spiked down, but I'm still watching between this 50 and 62.5. If we close the day below 103.60, though, I'm watching for a retest of the lows and a potential breakdown. Other than that, I don't have much bullish until we get back above about 104.35, unless there's some minor patterns. VIX, above 23.25, I'll be shifting minor bearish. Below 22.40, I'll be shifting minor bullish. Crude, We're trying to put in a little triangle pattern, but I can't get bullish until above about 77.80 or bearish back below the lows from Friday. Other than that, it's caught in here. Gold still holding up. Still watching 1781 for a key stop level. Just going to bump that up to the better pausing area. On a rally, we'll reutilize 1835, the major target area about 1848 to 1850. Here's your, see the Japanese 10-year yields. Remember, the band increased to 0.5, so this could still run up. That's where they will start intervention again. That's what we'll call it, intervention. But you see the big move overhead now. What does that mean for the US dollar, Japanese yen? What pattern do I have here on the weekly? Look at this. Head and shoulders. Upward sloping neckline. Looks like we could close the week back below the 50 week after first cross the rotation zone, rally up there with the neckline or the little shoulder. It's a little weaker right shoulder than left shoulder, but it's strong enough to utilize. Next target area is about 130.40. Look where these targets for the head and shoulders take us. All the way potentially back down, 115 level, which reconnects it with the 200 on the weekly and essentially wipes out the rally that started, the breakout rally that started in March of this year. We could reverse the whole gosh darn thing over the coming few months. So pay very close attention. You also have a weekly clear path down to here. And then you break below 127.12, you're into a major, another clear path, and not many stopping points. Yes, there are some minor stopping points, but not any major stopping points until you get back to the weekly 200. There could be some very good trading in the US dollar, Japanese yen coming up. Real quick, Tesla. Tesla still watching for a potential bottoming pattern in here. We should get a bounce at some point by year-end delivery figures, unless the market just rallies. My next support, I'm not using anything until the 129 level. We don't have a strong pausing bar. Once we get a decent pausing bar, I'll put up some downside projections. But that's about it. Watching for a bounce play in Tesla too, not because I'm bullish on Tesla, because of technicals. We are really getting to waning momentum to the downside with cycles at the bottom and oversold conditions. Hey, Andrea, thank you for being here. 1 hour double bottom. Yeah, in the notes. It's a potential. You can watch for it. I'll map it out. You can map it out right here. That's just a very short-term potential trade. And the key level I'd be focusing on is about 114.02. Thanks for pointing that out, Sterling. You just realize the companies pay dividend on all different dates and months. Yes, you can, but that's why there's an ex-dividend date, because you have to be the holder of the stock at ex-dividend date, and then you get the payout of the dividends. So yes, dividends are paid by different companies all throughout the year. So you can stagger. It's not a major strategy of mine to stagger dividends, but it is nice to always have the dividends come in. George has become the PTP dividend investor. Rich says short U.S. dollar Japanese is trade of the year. I think that will be a potential gift trade going into next year. It's going to be one I am majorly focused on, especially on rallies to set up short positions in the U.S. dollar Japanese yen. So, hope everybody continues to learn something, and thank you for all the contribution. You are welcome, Dave. Everybody, let's echo those thoughts. Trade well. If you don't have anything to do, do not force it. With the volume will be lightening up, but this week, reminder, don't get complacent just because we're getting into, we got Hanukkah going on. We got Christmas coming up this weekend. Don't get complacent because of all the info out. Thursday and Friday can be very market moving, especially if the markets get a little thinner. Let's just peek at the, I have to look at TSM. Tick, slight negative opening, but nothing major. Within easily the bounds. So little, very minor selling pressure. Nothing changes with that opening from my analysis. Ooh. Again, why we paid second target. Which turned into, this turned into a horizontal channel breakdown, which I forgot to update the targets. Hold on, I gotta fix this because they are technically updated. I didn't update it on these charts, so I have to be correct. Those are the targets. So that's why I almost said third target hit, because it is the third target hit from the horizontal channel breakdown. Also, TSM from a semiconductor. On any rallies I will be watching for new sell setups. I think this is going to unravel with a number of semiconductors. Also, for all you gap fanatics, double gaps to fill for TSM. You have your gap that's still unfilled from Friday, November 11th, back to 73.83, and then beyond that, Monday the 14th, down to 72.80. So you have a gap fill zone. Then you have a gap. That takes us back to the 50 to 62 range. Gap fill zone back to 70.84. That's why even on rallies with the cross of the rotation zone on the daily, we'll watch for more short setups. There we go. Peeking back at the S&P. All right, just going to watch now. Still key area. Nothing's changed. Nothing's changed. I will be watching if we pull back in here as my first key for any reversal patterns. If not, when we get that 15-minute close below 62.5, watching for a retest much lower with the overnight lows. I will wrap it up for now. Thank you for being here. Let's see. I went over multiple times what I'm watching for in the spiders. Or in the spiders, do we have a bottoming pattern? Not a great one. Let's just take a look. This, no double. But if you're looking for a breakout play in the spiders, I'd be using the bigger breakout play would be above about 380.50. That would be the breakout play I'd utilize. You're welcome, Anissa. Yeah, I saw that. That was absurd because it was put in the S&P mid-cap 400. Yeah, you put it in here. It's a complete joke. If that's not blatant, you're coming out with a company that virtually has zero options volume, and then a couple hours before it gets put in the S&P 400 mid-cap, there's massive option volume that goes off. How obvious can you be? I mean, that's sort of now. Will the SEC do anything? That's going to be interesting, but that's not the best way to play it. I know you're going to get the juice from it. I mean, but from the options, but you'd be better for mine to try to get into a stock position because it wouldn't be so frigging obvious. Oh, I mean, come on. This is where the SEC could be. They could act quickly on this, and these are the kind of things they should. But we'll see. I would not be surprised after this dies down to see a nice little pullback, though, in it. Yeah, if it was small players who did it, but, they'll pounce. But if it's the smart money, we'll see. Well, would it be smart money if the smart money did it? Another day in the market. All right. Thank you for sticking around at the open. I just got to peek back. Yeah. Can't do the breakdown yet. Keep an eye. Let's just see. Keep an eye. If the tick really firms up, keep an eye for that potential breakout play to the upside. Again, not trading or investment advice. That's what I'm watching, though. That's what I'm keeping an eye on. All right. I doubt it would be BlackRock. They'd seriously have to be morons. They print money anyways. Still, although it's waning. All right, with that, I will talk to everyone after the close with Bob Iacchino. Thank you, Christoph. Again, thank you for all the smarty pants for being here. Can you still say smarty pants in this politically correct world, or am I missing something? Am I missing something? Can I still use that term, or is it offending anybody? Okay. Hey, Mike, thanks for being here. Talk to everyone later.